we really believe in a future where there's going to be more decentralized systems that's more censorship resistant. They're higher availability. I don't think they would necessarily be cheaper, but depends on how the market structure evolves, because you can also have competition along the way that actually drives down the price if the bigger companies get more and more inefficient. But we do think that decentralized systems is a way to actually achieve the efficiency that traditional systems can't really achieve in terms of its flexibility, its speed to adoption, speed to market. And that's why we fundamentally believe in helping other people build better distributed systems. And we're starting on Solana, but it extends into all kinds of distributed systems in general.
None of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by WAGMI Ventures or any of its affiliates to buy or sell any securities. Hey everyone, Benga here with WAGMI Podcast. On today's episode, we have Jason Lee, co-founder of Solayer Labs, the restaking network built natively on Solana blockchain. For anyone who is new, this is the WAGMI Ventures podcast, where we do snapshots with interesting builders and founders across crypto and AI. Check out wagmiventures.io to learn more about the syndicate behind the podcast. Thank you for joining me as we launch into season 2 with myself, Benga Omashri, as your new host. Let's get it. Jason, absolutely great to have you on the show. And if you can't already tell from my voice, excited to have you as my first guest as the new season host, continuing on the amazing work Tanner has done over the last 120 episodes. Welcome.
Yeah, thank you. Pleasure to be here. Thank you for inviting me.
Yeah, 100%. It's good to have really interesting folks like yourself, especially with the huge narrative around DeFi and more deeper restaking. But before we get into that, we'd want to learn more about the genesis and evolution of Jason in crypto.
Yeah, absolutely. So I actually started in high school when there was, I think, almost 10 years back when I first got in touch with Bitcoin through a research project. And when I just got started, Bitcoin was still running on this old GUI, and then it would take about 2 hours to sync. So that was the very early day. I did a bit of mining then, but mostly on data analytics. So that sort of started my interest in distributed system as a whole. And then, of course, after that, there's like Ripple, Stella, did a lot of work in terms of, small contract things and running gateway for Ripple back then. So that was how it actually got started. And then the more I go into, I studied distributed systems more, but I also got, sort of played around with the, AI part of it, of distributed system, like training. Mm-hmm. Back in Berkeley, I worked on acceleration of compute using GPU clusters, and then the orchestration of training workload. And then after that, I heavily focused on multi-party computation, and I contributed to a custody systems that's now moving billions of dollars every week.
Yeah, no, thank you for that background, and definitely familiar with your project with MPC Vault, also another exciting project that you had birthed. Obviously, you're going to talk about your transition into the restaking narrative, but before we dig into that, help us understand some of the concepts that Solayer is founded on. So this, the narrative of staking, of restaking, liquid staking, what does that all mean? And where does Solayer play in the mix?
Yeah, absolutely. So maybe I'll start with staking. Staking is actually a process for building network security. In a distributed systems, how do we incentivize honest behavior? We have to have people have stake in the game. So, and how do we do that? Is by having them commit a certain capital to their node, so that if they're misbehaving, they'll get slashed. So that's the proof of stake mechanism. But how do we keep them incentivized in order to run the system? Because maintaining the system takes effort, time, it also costs money. So we're giving them inflation on the staked assets. And therefore, for POS systems, they're typically yields, right? Or / rewards that's giving out. So that's the staking process. And liquid staking, which is another common term that you see people bring up in the industry, is how do you make that staked position liquid, as opposed to just staked there, but you can't really move it. In financial markets, liquidity is the king. So what's liquid staking really doing is to turn that illiquid position into a liquid asset that represents that illiquid position. And then you can start trading around it. You can have that engage in the DeFi markets, lending, borrowing, and so on and so forth. So that's the liquid staking layer. And then restaking if you just look at the terminology, restaking, what that means is that you're trying to use staked assets in additional ways, right? Primarily to secure other networks. So that's one of the ways that you can use it. And for Solayer, not just that, you can also use it to help on-chain decentralized applications. So just want to stop there just to explain what people mean by restaking.
Yeah, and thank you for that. That's really helpful. There was a term you used there, and we're going to talk a little bit later about the risk management piece. But you mentioned slashing, and just for our audience, can you define what slashing is?
Yeah, absolutely. So slashing in general means a reduction in your staked assets, in your collateral. When you are trying to secure the network, you have to put down collateral, and slashing means that you're penalized, and therefore there's a reduction in the staked assets. So it's a negative economic incentive if you want to think about it from a network security perspective.
Got it. Makes sense. Yeah, and you're absolutely right there. Cash is, or I should say, liquidity is king in financial markets, and liquid staking sort of makes a ton of sense when you think about unlocking the other use cases beyond, tying down the asset, if you will, when you have them staked.
I also want to just give a very good example over there for liquid staking. I think it was first introduced by Lido before ETH 2.0, because before that, Ethereum was on proof of work, where you don't really need this model of a proof of stake, so you don't really have staked assets. But even before liquidity, this ETH 2.0 rolled out, Lido started aggregating the assets so that they'll be able to put towards the 2.0 POS model. So in order to give something back to people and encourage liquidity around it, so they're creating ETH, but it's wrapped in the Lido form, so Lido ETH, giving it back to people. And that's how it actually grew so quickly. So the liquidity around that really attracted a lot more, a lot of deposits.
And from that transition from ETH and the model that, I guess one of the early players, or if not the founder of this whole narrative around restaking, is Eigenlayer on ETH. And now Solayer is building that same concept natively on the Solana blockchain. Can you give us a bit of background about what the project Solayer is all about?
Yeah, absolutely. So Solayer is the native staking layer on Solana. We both help Solana decentralized applications, on-chain dApps, which we call endogenous AVSs. We also help, in the Eigenlayer way, external systems that want to have their own trust or economic security bootstrapped, that are off-chain, off the Solana chain. So Solayer is the restaking, but we help two different groups of builders. One is, folks who want to build on-chain, one is folks who want to build off-chain. And we name them endogenous AVS and exogenous AVS.
Yeah, I think this is probably one of your top differentiating competitive advantages over the other folks that are building in this space. Can you talk a little bit more into the endogenous AVS and exogenous AVS addresses?
Yeah, absolutely. So endogenous AVS refers to dApps on chain. So if you look at the Solana dApps, Drift, Camino, there's Oracle protocols, they are what we call dApps that are built on chain. And so the reason why we're doing that, we're focusing on endogenous AVS, is because Solana has a unique approach when it comes to transaction sequencing and lead validator selection. So at any given moment, there is only one validator that's actively sequencing transaction and also processing the transaction. And as that validator, you're receiving streams of transactions from different people. Right? It could be from wallets. It could be from a particular website that's a decentralized application trying to send you their user transactions. It could also be from dedicated RPC providers that aggregates the transaction of users and send it to you. So the problem is, how do you decide what transactions to take in? Because everyone's flooding you with different kinds of transactions, and there's a lot of network spamming. That's what people say, because most of the transaction might not even be valid, or some of them might not even be valid, right? So the question is, how do you select what streams of transactions to prioritize? How do you decide on the proportion? And the only way to do that is to make sure that I'm going to look at my counterparty stake because they're also participating in proof of stake. And I know as a fact, because I'm synced with the network, how much stake they have. So I'm going to provision the incoming processing, my processing capabilities to different channels based on each and every channel's associated stake weight. So that's what people call stake weighted quality of service, meaning that if you have more stake, you can get your transaction through with a higher probability. If you don't have that much stake, you can't really get your transaction through. Maybe it's just dropped, right? I'm just not listening in. I'm not processing your transaction. So that's a way to prevent network spamming. So the way that Solayer helps decentralized applications on Solana, which we call endogenous AVS, is that we're going to provision AVS tokens to these decentralized applications. They can use us to create such AVS tokens. And then when people stake as SOL into that particular AVS, they get back the AVS token, which is the liquidity part of it. But at the same time, the decentralized application will be able to enjoy higher stake weighted quality of service. Because right now, they can just call the Solayer endpoint and say that, hey, help me accelerate this transaction because I have the stake weight. And therefore, the lead validator, when they look at the stake weight that this particular decentralized application has, will be able to honor that priority or that bandwidth. So in some way, we're also doing reserved bandwidth allocation for decentralized applications through the means of AVS tokens. So sort of that's a high level overview for endogenous AVS. And now the exogenous part of it is really about Oracle systems that live off-chain, for example, like switchboard players, and they can even live on other chains, right? They don't necessarily have to be Solana related systems. It could be any IoT device systems or systems who are rolling up to other chains. It could be all kinds of decentralized systems that we support. And the idea there is that for any new decentralized systems, we need economic security to secure it, because that's the easiest form of security that networks can achieve in the most efficient way. But still, it is difficult. So think of Solayer's restaking like a library that people can just import, because we have not just code. Code is easy, you're importing a library, but more like the established form of capital on Solana to support those newer chains. And there are also operators who are willing to run nodes for these newer ecosystems. So that's what we mean by supporting exogenous AVSs. Think of us like a cloud that would just provision resources, but also security in the economic form, as opposed to the traditional I'm secure just because I'm audited. I'm not going to misbehave. I'm a big brand name in a centralized way, but more in a decentralized way. So that's a summary of exogenous AVS.
Thank you for unpacking that. I think it sounds very innovative, and certainly, we think about some of the work that has already been done in this space, especially from the EigenLayer perspective and sort of like their approach to restaking ETH. From a lot of what you've explained, it does sound that there might be some differences from the ETH standard and from Solana and how you guys approach it. And am I right?
Or absolutely, you're right there. So I think with regards to the differences, there are quite a few. I think first we have the endogenous AVS construct that EigenLayer just doesn't have, because it doesn't really apply to Ethereum applications. So right. For Solana, because it's still pretty much fast developing ecosystem as opposed to Ethereum, which are very much mature at this stage. So I think there's a lot more grounds for experimentation and growth. And I think endogenous AVS is invented because we see the need and unique needs of the Solana ecosystem players, where they can also issue yield-bearing tokens to their holders, to their users, and then under their own name. And they can also use that not just for yield generation, POS, and then for yield, we do have the native yield, POS yield, but also MEV yield, going back to the users. But at the same time, they can later use the same asset for securing off-chain systems that the same set of developers built. So I think we're just extending the concept and customizing it for Solana specifically. So that's on Endo AVS. And then the second thing is, even for exogenous AVS, the system is designed very differently, because if you think about what Ethereum is or means for the whole restaking network, that's the stake movement layer. when you try
Great.
to move, when you try to onboard somebody new to a network, and they will have to pay a particular amount as the deposit, let's just call it that way, that
Hmm.
settlement actually happens on Ethereum if you use EigenLayer, which is built on top of Ethereum, right? So that's costly, and that also takes a bit of time, because block confirmation time can take quite a few seconds. If you're in the rush hours of the blockchain, when the blockchain is very congested, you pay very high fees. A swap can be $10 or more, sometimes $20 during peak traffic on Ethereum. So that's sort of the experience that you will get. And also it's kind of slow at times. But yeah. So whereas on Solana, you get this instant confirmation of, okay, now you're into the system. And it also doesn't feel like you've spent a lot of money, because transaction fees like 0.00 something in US dollars. So that's the Web2 experience. So because of the chain differences, we're architecting our systems in fundamentally different ways. For Solana restaking, we're trying to support systems that could potentially scale out to millions and millions of users at the same time. Whereas for Ethereum, just because of the unique cost structure over there, I think it's probably going to be built differently than how Solayer is building the restaking network on Solana, because we're optimizing for adoption or optimizing for scale. So that's the difference, the fundamental difference if you look at how the chain impacts the restaking network design.
Got it.
I mean, for Bitcoin, it's a completely different picture, right? So I think people are also figuring out what's the best restaking mechanism on Bitcoin.
Got it. Hey, everybody. Quick thing here. We're excited to announce WAGMI Advisory, your home for all things fundraising, hiring, and partnerships. This is all about supercharging your project with the WAGMI network, consisting of over 20,000 executives, investors, and builders in crypto, all ready to come alongside your project to help it succeed. Get in touch at team@wagmiventures.io to learn more and figure out if WAGMI Advisory is the right fit for your project. Let's get back to the show. Thank you for those differences. And that's exactly where I was trying to drive at. I think a lot of it seems to stem from the underlying chain differences, which seems to have translated to how the architecture for restaking is being built. So as I think about that, what will you say are sort of like the potential benefits for the end user?
Yeah, absolutely. So there are kind of a few categories of end users that we've thought about during the process, and I'll just iterate them. So first, we have the app, stakers, decentralized applications users who are also staking into that particular application. So for them, they get yield, and potentially they get additional reward because the AVS itself is giving out the yield. At the same time, they enjoy the same kind of rewards as if you are in any other liquid staking platform, MEV plus the native POS yield. And you also get your transaction accelerated whenever you're using the decentralized applications. And for the AVSs, for endogenous AVS, and of course, the most important things that they get, higher bandwidth in terms of sending their transaction to the current lead validators, and therefore a higher probability of getting their transaction included. And for exogenous AVS applications, the immediate benefit is that it's so easy to build decentralized systems. So a lot of the modules that they had to write, they no longer need to do that. And a lot of the bootstrapping when it comes to economic incentive they have to do, they don't have to do that. And there are also systems that are very much centralized, even though they're called decentralized systems, because they're running on a quorum of 3 out of 5, and we know who the 5 are. And I think in the SEC's definition, people probably, it's like there is a risk for them to be called a centralized systems, and then they'll require sort of a money transmitter license or stuff because they're not truly decentralized. With restaking, there is an easy way for them to make everything in a truly decentralized form because there's economic security that comes with it. There are also a lot more nodes that they can now trust because there's a lot more capital dedicated to those nodes. So it makes sense for them to just change the trust models. So I think that's for stakers and the different types of ABSs, in terms of how they benefit from Solayer.
Yeah, that's awesome. And I think just thinking about benefits and, the possibilities here, there is a strong outlook for restaking. I think even in the Solana ecosystem, there's approximately 296 million SOL tokens that are staked today. It's probably, somewhere around, let's say $50 billion at today's price. And, What are your thoughts? And I mean, obviously, Solayer is being built to capture this economic potential here. But what are your thoughts on, and how do you anticipate this would look like going forward? In addition to that, just because of how massive these numbers are, and I'm particularly thinking of our institutional listeners here. How are you thinking about the risk management framework around such a massive, number?
Yeah, absolutely. So, to address your first question, how much do you think the 296 million of SO are going to be restaked? I think probably all of them. And the reason why I'm saying that is because the restaked form of SO would carry native yield. And if you're not holding the restaked form of SO, you're actually losing out because there's like inflation, just like you're not putting your money in the treasury bills to earn the 5% at the moment, right? So everyone else is earning the 5%, but you are not. So you're going to be disadvantaged just because of the natural network inflation that sets in. So that's sort of the first reason from economics. And second, I think Solana is very interesting because there is a way for you to pay for a gas fee using stake SO. You just have to transfer it or swap it into native SO and then pay it immediately. Right. So the reason why I say this is unique is because you can do it in one step, in one transaction, and you can have somebody else sponsor the gas fee, even if you are an EOA account, whereas this is not possible on Ethereum. So on Ethereum, you can't really do that. So, but whereas on Solana, you can actually hold SO and then somehow use that SO to pay for gas fee as opposed to SO. So that's something that internally we're working on and see what was the best way for, wallets or whatever, these decentralized applications to get integrated. But basically you do it in one step and user don't even feel about it. So you're always holding yield bearing assets. So think about you're holding treasury bills at 5%. You're also spending their treasury bills directly. So that's sort of the feeling that we want to be able to create and the experience we want to be able to create for the entire community. In terms of the total asset level for restaking on Solana and specifically on Solayer, I think it's going to be more because yes, SO will participate in the restaking network, but so will other tokens issued by the networks themselves. And they'll just use Solana's Solayer as a way to move their stake, monitor their stake, and have this on-chain attestation of the stakes when they're controlled by different addresses, when they're validated by different validators. So because Solayer is designed to accept SPL tokens in general, and I think you'll see a lot more assets than just the market cap of SO coming into the protocol going forward. So that's something I want to say. It's just not just SO, but also beyond the SO native asset.
So that's potentially even larger than the number that I quoted earlier. And then it does get the wheels spinning about, I think, this other part you're trying to answer here on risk management. Like, how are you guys thinking about that?
Yeah, absolutely. I think risk management is very important because, I kind of have a risk management background, but more from a security perspective. So for everything we build, we analyze the security for each and every component and how do the components interlink with each other? And are we missing any sort of attack vectors just because the components are linked in a different way? And if somebody push a change to one component, does that change the entire system? So that's always on top of our mind when we design any systems. So when it comes to risk management framework, I just want to introduce how we're thinking about it, right? So there are a few different kinds of risks. The first risk is the contract risk. So anything that lives on top of Solana, of course, would have to be supported by Solana and then the Solana contract system and then the contract that we deploy. So there's a set of risks over there. And the way to mitigate the risks is to have as much auditing as you possibly can. So at Solayer, we do engage with at least 3 auditing firms for every contract that we're pushing to the mainnet. And for every build that we're pushing to the mainnet, there's a multi-sig process. And in addition to that, we also do verifiable build. So all the hashes are confirmed by different parties independently before that's pushed to production. I've learned over the years, heard of a lot of stories of how, the process, even though it seems right, but actually not executed in the right way because of people's tunnel vision and etc. So I've designed a much more comprehensive process than what I can share right now. But in summary, that is what we're doing in terms of managing the contract risk. Of course, there's also the risk about Solana itself in terms of itself as a platform that's that holds up integrity, that's immutable to attacks and etc. But that's sort of the base risks that people have to assume. And then one layer above, we're looking at protocol risks. What I mean by protocol risks is that the specific interaction logic that, how we're moving the assets, how assets are issued, how it's collateralized, if any, are properly proven. The logic themselves are properly proven, and they do not lead to loss or, unintended loss of assets. So the way to do that, it's very much similar to contract, have more auditing and have more, formal verification or proof process from within the team before it's engineered, coded, and then delivered, etc. So one more thing I want to say is that there's also the price risks for Solana if you're looking at from, a investment perspective, right? So that would depend on the strategy. For example, like what's the strategy that you're adopting? Are you hedging the SOL price risks and just try to get the yield from all the ABSs? That's, a good strategy. But if you're properly hedging the risks of, price risks, then you should be delta neutral with respect to some of the price movement. And then, of course, last but not least, just to add to the protocol risks part of it, is how we're going to, think about slashing, if there is any, right? And for slashing, the model that we're thinking about is that I think for EigenLayer, you're able to slash everything. But whereas for Solayer, we have a maximum rate at which the assets can be slashed. So stakers have a minimum guarantee that even if everyone, that they're interacting with misbehaves, the maximum rate at which they're losing their asset would be this particular rate. So they know what the downside is in terms of capping the downside is what the protocol would also be able to guarantee them.
Yeah, thank you, man. You did an amazing job just unpacking there, whether it's, from the contract side or price or protocol, the different risk parameters that you're working to solve for. I think one of the most pronounced one, of course, tends to be slashing. So it was really good that you sort of helped, go into details there as well.
Yeah, I just want to add that Solana doesn't have the native slashing turned on. So right now, everything is still riskless, even if you're delegating to different validators and the validator somehow misbehaves, there is still no impact to the asset that you have delegated towards the specific validator at the moment.
Is that likely to change as further development happens in the Solana restaking system space?
Yeah, so I think that does not, whether that gets changed or not doesn't directly correlate with our development of the restaking platform on Solana. More depends on Solana's roadmap. I think right now, I don't hear of any plans to change it, but I think something like this would more be event driven, right? So if something happens, then people realize that, okay, maybe it's time to make that adjustment. But I don't know if there are plans that's already in the roadmap that want to get this turned on and changed.
Got it. Cool. Just switching gears a little bit, we've obviously done quite a bit of talk around the tech, the innovation that you guys are bringing into native restaking for Solana. I just also want to, hear your thoughts around the regulatory environment in which all of this works. So last week, Solana ETPs and ETFs were approved in Brazil. Obviously, there's been a similar push for regulatory approvals of Solana ETPs, ETFs in the US. And of course, they're pending filings from VanEck and 21 Shares. 21 VanEck obviously being pretty bullish in how that all plays out. I think all this is a key part of Solayer's long-term success. But hate to put you on the spot like this, but is there any sense on how you think this is all going to play out in the US and other potential jurisdictions that you guys are keeping an eye on?
Yeah, I think that's definitely very interesting because there has been talks where restaking is the actual format, how the ETF assets should be parked. And I think that's evolving conversation because, of course, people want to be able to generate yield on any assets. And if the ETF assets are just staying as their native form, they're actually losing out. We discussed that about how the economic incentive is designed in a POS system. So I think gradually people will be able to move into the staked form of ETH, and then the staked form of other assets, and then the restaked form of those assets. So I think that's going to be the long-term trajectory, but for the market to be comfortable with that, I think, because in TradFi, people do a lot of risk assessment and it takes time for them to understand how everything is. And they want to have, more sort of exposure only when the system is more mature. So I think it just takes time, but there is no but it's indisputable that it's going to happen. I think from, like almost 10 years ago when the conversation of Bitcoin started to now, I think a lot have changed. It wasn't really regarded as an asset, but more of a speculative instrument, but now as a, what people call alternative asset investment. So they kind of formalize it under, alternative asset, Bitcoin, all these other cryptocurrencies in general, blockchain-based assets. So I think I do see a lot of institutional movement into crypto when it comes to capital allocation. And we're going to see that continue. I think there's no doubt of that. I think the core or the key question here is to what extent would the institutional / ETF inflow benefit other parts of the ecosystem as opposed to the crypto native inflow that we saw back in 2017 and 2018, where there is this overflow from the Bitcoin prices to the other protocols in the space. But we don't really see as much of that in this particular cycle, driven by the ETF inflow and the sort of the formalization of all these assets as an investment class for the traditional asset managers.
Yeah, no, that makes sense. I think you actually touched on what was going to be my next question about your vision for the project as this all plays out. It's sort of like the roadmap, and I think you touched on it. Solayer and Solana being just broader ecosystem effect beyond the crypto native piece. But if you could share more about what the roadmap for that vision looks like, that would be awesome.
Yeah, absolutely. So I think as a restaking network, our mission is to help other people build decentralized systems in an easier way in going forward. So that's why we're providing, the value that we're providing right now is having this economic incentive set up right from the very start, so they can just like import this as opposed to start everything on their own. And I also think that a lot of the systems are going to be fee-based in the future. So they want to be decentralized and also fee-based. So the POS security is something that they definitely want to take in as a package, just like you're importing a library from a programming, if you're speaking, the programmer's language. And then the second thing is we're building a lot more modules for folks to also to make things easier. For example, like attestation of the stake, what's the mechanism over there? How do you help people with noise protocol discovery, but also anti-spam? So those are some of the very fundamental building blocks for each and every distributed systems. So that's something that Solayer is working on and working towards. We really believe in a future where there's going to be more decentralized systems that's more censorship resistant, they're higher availability. I don't think they will necessarily be cheaper, but depends on how the market structure evolves, because you can also have competition along the way that actually drives down the price if the bigger companies get more and more inefficient. But we do think that decentralized systems is a way to actually achieve the efficiency that that traditional systems can't really achieve in terms of its flexibility, its speed to adoption, speed to market. And that's why we fundamentally believe in helping other people build better distributed systems. And we're starting on Solana, but extends into all kinds of distributed systems in general.
Speaking of roadmaps, and with all that being said,
Yep.
there is a lot of anticipation for your mainnet launch. I mean, even your soft launch, I think, was filled in like 45 minutes of go live, right?
Yeah.
So I think about, okay, when is this happening? When is the mainnet launch? What can you share with us about that?
Yeah, absolutely. We actually made the mainnet live today, and we launched it with a few partners. Yeah, thank you. So we launched it with Bonk, Sonic, SVM, which is a SVM rollup. And by the way, I do believe in the proliferation of SVM systems in the future. I think most people are talking about L2s based on EVMs, but I actually think SVM is the right structure for end user interaction, just because it's much faster. It's like one click as opposed to multiple clicks. Even if you want to do a swap, much less risks when it comes to writing the contract in the bad way or users not knowing exactly what they're trying to do. So I think I'm very excited for some of the partners we're launching with as well, and then also Hashkey, which is a big provider. I mean, they do a bunch of things right in Asia, and they're a lot more. Layer, I think we got them added not too long ago. Also want to give them a shout out. That team is really really knows the entire space and really an expert in the rollup system, and they have been helping with a lot of rollups. And they are the entity that's actually helping a lot of projects launching chains. The chain company behind a lot of companies. So very excited about that. And going forward, we're going to have more partnerships. I think a lot of them are up and coming. We're going to roll out more things for exogenous systems as we secure those partnerships. We're testing a lot of systems right now. We just want to make sure that when everything goes live, not just the whitelisted partners can use it, but everyone can use it. So that's why we try to open source the command line, have more documentation on every field and every contract field that, how to interact with the protocol. So you can find all those on docs.solayer.org. And then it will be more distributed systems infrastructure, for example, like things I spoke about, noise protocol, how do you do stake weight attestation, and so on and so forth. And depending on, what builders need, we'll move in that direction in general in the future.
Yeah, that's really exciting news. Obviously, looking forward to engaging, and it definitely sounds like you have a really strong partnerships as you go all along. I'm also a personal fan of Bonk, and I know that you'll be expanding what that ecosystem of partners look like. That's all really interesting stuff. And as you think of, everything staking, restaking, I really love the fact that your ethos continues to be that, decentralization theme and like expanding beyond the Solana ecosystem. And so really rooting for you. Obviously, a lot of strong traction already. And, we'll be looking forward to seeing how it all plays out. And I guess, yeah, of course, I guess my final point here would be outside of, the DeFi restaking, liquid staking narrative, what else in crypto excites you?
Yeah, I think the most exciting things outside of DeFi, I mean, it's sort of DeFi related, is payments, because I think the payment is an industry where there's just too much regulatory hurdles for anyone to build anything innovative. And we're starting to see how blockchain is really becoming the internet of money and value movement. We're starting with different tokens. First, it was Bitcoin. Then we have stable coins, and now there's RWA assets. I think you can pretty much get banked by blockchain with US dollars. And then there are more off-ramp avenues being built. So that people are building credit cards, people are building on off-ramp solutions, checkout solutions. So that really excites me, coupled with the DeFi part of it, how that interacts to create more accessible products where risks are more transparent because you can know the on-chain allocation for different strategies if it's, a strategy-based product. So those really excite me because I think there's a lot of potential for us to decrease the inefficiency of a centralized and tightly controlled system in Web2, but innovate on top of that and making sure that payments is instant. There's cut out all the middlemen, but you can also have different financial services like insurance at the most competitive price, as opposed to an oligopoly market structure when there is heavy regulation. Because as part of the, whenever there's heavy regulation, the number of market participants will also just get reduced to 2 or 3. And then most likely number 1 and number 2 will take up more than 50% of the market share. So I think blockchain really gives, opportunities to a lot more people to create a different competitive market landscape. And I think that's very interesting.
I'm also a huge fan of the Internet of Money and that aspect of DeFi. And so, yes, 100% aligned with you on that space. I'm pretty sure that you might find yourself also innovating or doing some innovation in that space as well.
Yeah, we're very much looking forward to a future where, like anyone can do anything and they can also be trusted. So I think that's the fundamental thesis that we have, and we're just here to enable that to happen, and that's sort of our mission from day one.
Awesome. Well, I can't tell you how appreciative I am of you being on the show today. It's my first show as host. Definitely very insightful conversation, exciting project, much more interestingly, and looking forward to seeing more great things come out of Solayer.
Yeah, thank you very much.
Yeah. Thank you for being on the show today, Jason. Hey, everybody. Thanks for listening. If you enjoyed the episode, go ahead and give us a good 5-star rating and subscribe wherever you're getting your podcasts so you can get all the latest conversations from the most interesting founders, builders, and investors from across the world. Thanks so much and have a good one.